Foreign currency and exchange are combined to form the term forex. The process of changing one currency into another is known as foreign exchange, and it typically occurs for business, trade, or travel. The Bank for International Settlements 2019 Triennial Report states that $6.6 trillion was traded daily in FX in 2019. Currency trading may be challenging and risky. Rogue traders find it challenging to affect the value of a currency because of the system's massive transaction flows. Investors that have access to interbank dealing can benefit from this system's contribution to market transparency. Retail investors should take the time to educate themselves on the forex market before deciding which forex broker to work with. They should also determine whether the broker is regulated in the US, the UK, or in a nation with looser regulations and monitoring. Finding out what kind of account protections are offered in the event of a market crisis or the insolvency of a dealer is also a smart idea. Keep watching to learn about the forex markets, what it's used for, and how you can get started trading. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. What is the forex market? Currency exchange takes place on the foreign exchange market. Because they enable us to make local and international purchases of goods and services, currencies are crucial. To engage in foreign trade and business, foreign currency must be exchanged. If you reside in the United States and wish to purchase cheese from France, the French must be paid in euros by either you or the business from which you purchase the cheese. The importer from the United States would then need to convert the same amount of dollars to euros. The same is true with travel. An Egyptian tourist from France cannot see the pyramids by paying with euros because that cash is not accepted there. The visitor must convert their euros at the current exchange rate for the local currency, in this case the Egyptian pound. The absence of a central exchange market is one distinctive feature of this global market. Now of taking place on a single centralized exchange, currency trading is instead done electronically over the counter, which means that all transactions take place via computer networks among dealers all over the world. In practically every time zone, currencies are traded in the major financial capitals of Frankfurt, Hong Kong, London, New York, Paris, Singapore, Sydney, Tokyo, and Zurich. The market is open 24 hours a day, 5.5 days a week. This implies that the currency market in Tokyo and Hong Kong opens fresh at the conclusion of the US trading day. As a result, the currency market can be very lively at any time, with continually shifting price quotes. Spot market. Because it deals in the largest underlying real asset for the forwards and futures markets, spot market forex trading has historically been the largest. Prior to this, the forwards and futures markets saw higher volumes than the spot markets. However, with the introduction of electronic trading and the growth of forex brokers, the trading volumes for forex spot markets increased. According to their trading price, currencies are purchased and sold on the spot market. In addition to current interest rates, economic performance, sentiment toward present political circumstances, and expectations for how one currency will perform versus another in the future, its price is controlled by supply and demand. It is estimated based on these criteria. A spot deal is a completed transaction. A specified amount of another currency is received at the agreed upon exchange rate value in a bilateral transaction when one party provides an agreed upon currency amount to the counterparty. The payment is made in cash when a position has been concluded. Even though the spot market is frequently thought of as one that deals with instantaneous transactions, these trades really require 2 days to settle. Forwards and futures markets. A forward contract is a confidential agreement between two parties to purchase a currency on the OTC markets at a future time and at a preset price. A futures contract is a typical contract between two parties wherein they agree to accept delivery of a currency at a later time and at a predetermined price. Futures trade OTC, not on exchanges. In the forwards market, contracts are purchased and sold over the counter, OTC, between two parties who agree on the conditions of the transaction. On open commodity markets, like the Chicago Mercantile Exchange, futures contracts are purchased and sold based on a standard size and settlement date. The National Futures Association oversees the futures market in the U.S. Futures contracts include certain requirements, such as the quantity of units being traded, delivery and settlement dates, and non-customizable minimum price increments. When providing clearance and settlement services to the trader, the exchange serves as a counterparty. Both forms of contracts are legally binding and, though they can be bought and sold prior to expiration, are normally settled for cash at the relevant exchange. When trading currencies, risk can be reduced by using the forward and futures markets for currencies. Large multinational organizations typically use these markets to protect themselves from future currency rate swings, although speculators also participate in these markets. How to start trading Forex. Trading Forex is similar to equity trading. Here are some steps to get yourself started on the Forex trading journey. Number 1. Learn about Forex. Despite not being difficult, Forex trading is a unique project that calls for specific understanding. For instance, the drivers for currency price movement are different from those for equity markets, and the leverage ratio for FX trades is higher than for shares. The fundamentals of Forex trading are covered in a number of online courses for beginners. Number 2. Set up a brokerage account. To begin trading foreign exchange, you will require a brokerage account. Commissions are not assessed by Forex brokers. Instead, they profit on the differences in price between the purchasing and selling prices, or spreads also known as pips. Setting up a micro Forex trading account with minimum capital requirements is a smart option for novice traders. These accounts contain flexible trading restrictions that let brokers set trade minimums as low as 1,000 units of a given currency. A regular account lot is equivalent to 100,000 currency units for context's sake. You can find your trading style and increase your comfort level with Forex trading with the aid of a tiny Forex account. Number 3. Develop a trading strategy. Although timing and market prediction are not always achievable, having a trading plan will help you establish broad principles and a roadmap for trading. The reality of your circumstances and money serves as the foundation for a sound trading plan. It considers the amount of money you are willing to invest in trading and, consequently, the level of risk you can withstand without losing all of your investment. Keep in mind that Forex trading typically occurs in a high leverage setting. For those who are prepared to take a chance, it also offers greater rewards. Number 4. Always be on top of your numbers. Always review your positions at the end of the day once you start trading. A daily accounting of trades is already offered by the majority of trading software. Make sure you have enough money in your account to execute future trades and that there are no open positions that need to be filled. Number 5. Cultivate emotional equilibrium. Beginner Forex trading is difficult since there are a lot of unknowns and emotional ups and downs. Should you have kept your position open a little bit longer to reap greater profits? How did you miss the news that your portfolio's overall value had decreased due to low gross domestic product figures? Such unresolved issues can cause you to get confused if you let them consume your thoughts. Because of this, it's crucial to maintain emotional stability through wins and losses in your trading and to avoid getting carried away by your trading positions. Maintain discipline when it comes to closing out your investments. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.